In this video, I'm going to show you no matter how your business is set up, whether it's a sole proprietorship, an LLC, an S corporation, or even a partnership, how much tax you might owe for each entity type, how to make those tax payments, and even when those payments are due, so you don't have to worry about late payments or any other types of penalties, okay? But before we jump in, if it's your first time here, my name is Navi Miraj. I'm a CPA that teaches entrepreneurs how to save thousands of dollars in taxes. I do that here on social media, but I also do it in a more easy to understand and comprehensive manner through a course. You can find those details on my website, which is navimirajcpa.com. But for now, if you get value out of this video, consider subscribing to the channel or perhaps liking it and sharing it with a fellow entrepreneur. So here's what I would like you to do when we're talking about this is try to think back to when you were an employee, okay? When you were an employee, you got paid by your employer every 2 weeks or so, right? And when you received your paycheck, federal income tax, Social Security tax, and Medicare taxes were being withheld from your paycheck, and you were receiving the net amount of that paycheck, right? That amount was either being given to you physically with a physical check or most likely direct deposited into your personal account. Now, of course, if you lived in a state that had state income tax, then the state income tax was also withheld from your paycheck as well and not given to you. Well, behind the scenes, your employer was actually holding on to that money, right? They call it income tax withholding. So that money was withheld from your check. And instead of paying it to you, and every 2 weeks or so, what they would do is every 2 weeks or so, your employer keeps that money in their business account and then sends that money on your behalf to the federal and state governments. Well, now that you are a business owner, no one is doing that for you, right? So it's now your responsibility to estimate your taxes and pay them each quarter. But the problem is, no one's really teaching you how much to estimate or how to pay those taxes, which again is what all this video is all about. So let me transfer over to my a spreadsheet that I created to kind of cover this for you, and I'm going to break this down for you so that you can finally understand how this works. Okay. Now, I know you see a lot on the screen here, but before you panic or freak out, don't worry. I'm going to explain all of this to you. So let's kind of go through. Let me give you sort of a layout of the lane here of what we're looking at. So these different colored columns are just saying, hey, in this light blue color, I'm saying this is the scenario. If you're a sole proprietorship, that means you're just out there doing business. You didn't form an entity or anything like that with your state. You just started doing business. Or it could mean that you formed a single member LLC. That's an LLC with only one member on it. And by default, single member LLCs are taxed as sole proprietorships. Okay. In the second column, this sort of purple color, this is a scenario where you've elected to have your business taxed as an S corporation. So in order to do that, you formed an LLC, perhaps single member or multi-member, or you formed a corporation, a C corporation, and then you elected with the IRS by filing a form called Form 2553, you elected to have that entity taxed as an S corporation. That's what this purple color column represents. And then over on the right, this is a partnership example. So businesses that are taxed as partnerships. So you're taxed as a partnership if even if you don't have a formal agreement, if you are two different people doing business together, you are now a partnership, or you may sort of officially created a partnership by filing or forming a multi-member LLC with your state, and those two members on an LLC by default it'll be taxed as a partnership. All right, so that's what these three columns are: sole proprietorship, S corporation, partnership. So what I'm showing here is in each one of these examples, there was revenue. So you earned $125,000 of revenue or sales in your business, right? So you sold whatever amount of products or you performed whatever types of services, and all your customers for the year, they paid you 125 grand. And then obviously business expenses, I'm saying this is things like advertising and marketing, software fees, things like of that nature, other tax strategies, writing off home office, cell phone, things like that. Those were your business expenses, and you land at $100,000 of profit, right? You can see that's the same across all three of these different types: sole prop, S corp, and partnership. Where things start to differentiate is, let's now, instead of covering all three at once, let's cover them separately. So sole prop, what happens here? As a sole proprietorship, you mainly pay two types of tax. You pay what's called self-employment taxes, which is Social Security and Medicare, and you also pay federal income tax. If you live in a state that has state income tax, you got to pay that too, all right? So let's break this down. A sole proprietor has to pay Social Security and Medicare taxes as both the employee and the employer, okay? Because a sole proprietorship doesn't get some of the benefits that an S corp has. So how this math works is if you take $100,000 and you multiply it by 6.2%, and then that's the employee portion of Social Security, and then you take 100 grand and you multiply it by 6.2% again for the employer portion, the total of that is 12.4%, and therefore the math on that's pretty easy, right? 100 grand times 12.4% is 12,400. Very similarly, the business profit, again, 100 grand is multiplied by Medicare. You pay Medicare as an employee and employer as well. That adds up to 2.9%. So the 100 grand times the 2.9% is 2,900. So in Social Security and Medicare taxes alone, you're going to pay something close to $15,300. All right. Federal income taxes. What happens here is your 100 grand that you earned in profit is going to flow through the tax brackets, and I'm going to show you that here in a moment, but that's going to flow through the various tax brackets, and your income is going to be taxed at different tax rates. And as an example, I'm just choosing, and again, I'll elaborate this on a second, like I'm just showing this is a single person, so not filing married, filing jointly, but filing single. Their federal income tax on making 100 grand might be something like $10,374, okay? Now, a lot of you, for a state, you might be in a state that doesn't have state income tax. The reason why this says fixed or graduated is because some states have a flat tax where they just say, hey, all of your income is taxed at 3%. And other states have what's called sort of a graduated tax. So very similar to the federal tax system, they have different levels of income are taxed at different tax rates. So for example, the first 5 grand of income might be taxed at 2%. Then the next 5 grand might be taxed at 3%. And then let's say 10,000 on, going forward is, 7 or 8%, so forth and so on, okay? Again, I'll come back to the details of this in a moment, but I want to run through the S corporation example next, okay? So same thing happened here. No point in talking about this part anymore. But what happens with an S corporation is you take your 100 grand of profit and you split it into what I'm calling two buckets. What I mean there is you have to pay yourself a reasonable compensation for your services that you provided to your S corporation. I'm just making this number up for now. I'm saying it's $40,000. Okay, so in this example, let's say your name is John. John's reasonable compensation is 40 grand. The remaining money, the $60,000, that can either stay in the business or it can be taken as a distribution. So John can pull that money out of his business account and take that money as a distribution. Regardless if John takes that money out of the S corporation or not, they're gonna have to pay federal and state income tax on it, okay? Let's stay on the topic of Social Security and Medicare tax for a moment though. The strategy here with the S corporation is that John is going to pay Social Security and Medicare tax on his 40,000, not the 100,000 like it was over here with the sole proprietorship, okay? So you take the 40,000, you multiply it by the employee rate, 6.2%, so John's paying $24.80 in Social Security tax. John's employer, which happens to be his own S corporation, is doing the same. So on 40 grand times 6.2%, John's employer, so whatever the name of John's S corporation is also paying $24.80 in Social Security and Medicare taxes. I should say Social Security taxes. Medicare is different, right? 40 grand times the 1.45 is the 580, and the same thing on the employer side of things, okay? So you can see the potential sort of S Corp tax savings here is the difference between 15,300 and 6,120. Those aren't the exact numbers, but this is just a general explanation of how this stuff works. But if you're trying to calculate how much money can an S Corp save me, this is the maximum sort of tax savings you could sort of receive using these numbers, okay? I'm gonna come back and explain why federal income tax is a little bit different here, because remember, the business still made 100 grand in profit. So you might be wondering, well, why is the federal income tax a little bit more? We'll come back to that here in a second. State income tax, I'm just putting it as 5 grand. We'll elaborate that on in just a moment, okay? Let's go look at the partnership here, okay? Partnership, same thing. The whole partnership brought in 125, 25K in expenses, $100,000 of profit, but you got to split this profit between two different partners, right? And let's just assume they're 50-50 partners. So what you might notice here is that this kind of works the same exact way as a sole proprietorship does, just with less money. So partner one's gonna get 50 grand, right? Half of 100 is 50,000. Partner one is gonna take 50,000 times 12.4, because they're the employee and employer, and pay 6,200. And then 50,000 times the 2.9, because again, partner one is the employee and employer, and is gonna pay $1,450 between Social Security and Medicare taxes. Partner two, it's the same exact thing, right? They also made 50 grand. You multiply it by these percentages here, and that's how you get to these numbers. If you look at it, it makes sense, right? A partnership is kind of like having two different sole proprietors come together, and that's why these numbers is exactly half of this number. And that's why this number is exactly half of this number, okay? So you see the total here paid, if you add these two together, is 15,300, just like it is here, all right? And now here down on the federal income tax, again, I'll elaborate on this a little bit more in a second. It's 50 grand that's going through their federal income tax brackets, and that's why this is so low. It's 3,044. And then the state income tax, same thing. I'm taking $50,000, multiplying that by, I think, 5%, and that's how we're getting to the 2,500, okay? Let me take you through that here a little bit further with the federal income tax. So let's start with the sole proprietorship again. So I said 100 grand is gonna pay $10,374 in federal income tax. Well, on a separate screen here, I have that number for you. So what I want to show you is, I just went to this calculator, and I'll put this in the description below if you're watching on YouTube. This is by Ameriprise. And I'm saying, hey, this filing status is single, right? They're not married. And I put here $80,000 in wages. I'll come back to that in a moment as to why it's 80,000 and not 100. So when you put single and you put 80 grand, the $80,000 is going to flow through these tax brackets, right? This is something people get confused by. They're like, they might look at these tax brackets and say, hey, I made $80,000 or $100,000. So that means all my income is being taxed at 24%. No, that's not how it works. It's showing you the different brackets. So 0 to 10,000 and change is 10%, 10 to 75 to this amount is 12%, and so forth and so on, okay? So that's how I was able to develop this, and that's what you should do too. Maybe go to this calculator, plug in if you're single or married filing jointly, type in what the amount of profit is that you had from your business, put in if you have a child or not, and it will calculate the tax credits. Like if I had put in one dependent, then all of a sudden I owe about $2,000 less because the tax credit is $2,000. So you see this number went from $10,374 to $8,374. So I'm gonna switch that back, okay? Also too, while doing this, you might wanna add your spouse's income here too. So again, I'll explain why this is 80 and not 100 in a second, but let's say your spouse makes 100 grand as an employee. Okay, so now you got $180,000. Okay, this is how you might estimate how much tax you owe. So you might now owe close to $34,000 in federal income tax. So what you might want to do is say, okay, well, we're going to owe $34,000 in federal income tax. let me subtract the amount of taxes being withheld from my spouse's paycheck each time she gets paid, right? So let's say for the entire year, she's having, I don't know, $13,928 withheld from her check. That leads you to believe, okay, well now I need to make sure I pay at least 20 grand into the system to make sure that when I pay my taxes at the end of the year, I don't owe a bunch. That might have been a little bit too detailed here. So let me switch this just back to single and income of 80 grand. Okay, so again, single 80 grand, 10,374 is how we got to this number right here. For state income tax, you might want to use a tool. I have something pulled up for that as well. Right here, this is by the Tax Foundation. I'll put this link in the description below too. It just goes through each state. I decided to just pick Alabama as if that was the state that I was having. And I said, hey, the state tax bracket, you know, as soon as you hit 6,000 in income, married filing jointly, or 3,000 in income as a single filer, you're paying 5%. So what I did for simplicity purposes is just said, hey, I'm just going to do 5% for this math, right? So I took the 100 grand, multiplied by 5%. Same thing here, 100 grand by 5%. Here, it's the 50 grand times 5%. Okay, so that's how I kind of estimated that number. But go to you know, this website if you don't know how much your state, you know, the tax brackets in your state, or if you're in a state like Alaska, there's no income tax, right? So you don't have to worry about that part of it. So maybe use this website as a reference to calculate your numbers, okay? So I think it's time that I sort of address this thing that I mentioned a few times now. Let me read this box to you. It says, note, remember, this is all just an estimate, okay? For the sole prop and partnership examples, you can use 14% instead of 15.3% to account for a federal tax deduction you receive for paying self-employment taxes. So what I mean by that is, earlier I was saying, hey, 100 grand times 15.3% is 15,300. If you really want to dial that in and you're doing this math over for your own business, take the 100 grand, multiply it by something more like 14%, because that's probably what the number is going to be like, because you get a little bit of a tax deduction for paying self-employment taxes. So if you want to dial it in, that's what the number you can use. Let's look at the other sentence here. So also for the sole proprietorship and partnership examples, you can reduce the business profit, which was 100K in my examples, right? 100K and 100K over here, by about 20% when calculating the federal income tax to account for the qualified business income deduction. I know I'm giving you a lot of information here, but basically there's a deduction that applies to sole proprietorships and partnerships to where you get a 20% deduction based on your business's profit. That's why when I was showing you, you know, the income tax calculator here, instead of 100 grand, I put in $80,000, right? Because I kind of was trying to get you a truer number to account for that. If I just left 100 grand here, you can see that instead of 10,000 and change in taxes, it's now almost like 15 grand. So that qualified business income deduction is pretty powerful. All right. Let's go on and read what it says here. For the S corporation example, you can reduce the distribution amount, which is here, the $60,000, by about 20% when calculating the federal income tax to account for the qualified business income deduction. All right. So for the S Corp example, I entered $88,000 because I took 20% off of the 60,000. Okay. So that was 48,000 plus the 40,000 of reasonable compensation to arrive at 88,000. Let me show that to you visually, just in case that kind of misses you up. $88,000 is what I put here. Where did that come from? Again, that's the 40 grand here. And then I reduced this amount by 20%. So I took 48,000 plus the 40, and that's how I got to $88,000, okay? Again, for the partnership example, I entered in $40,000 for each partner because I took 20% off of the $50,000 profit number to arrive at $40,000, okay? I'll just show it to you visually just in case. All I'm saying here is instead of $50,000 of profit, I put in 40 grand to help account for that qualified business income deduction to show me the taxes that I might owe. Again, your numbers might be different, and they should be different, right? If you're married, switch the filing status to married. If your spouse makes income as well, then throw her income in here, his or her income in here too, so you get a more realistic number for your exact situation. Okay, so what I would recommend actually is follow my steps. Go through this video again, watch what I did, and then do this for your own business so you can have a better idea as to how much tax you're gonna have to pay. If that last part confused you about reducing stuff for 20% and stuff like that, you know, that was all related to the qualified business income deduction, skip it. Okay, just skip it. Just know that your estimate will be a high estimate, and if you make those payments throughout the year, you're gonna end up with a tax refund. So that could be like a bonus that you didn't realize was coming your way, okay? As I mentioned earlier, I'm just touching really on the surface here about some of these things. You know, if you're a little confused, that's totally okay and normal. If it's the first time you're seeing some of this stuff, you may need to watch, again, that part of the video one more time. But in my course, I have more time with you, and I make sure you understand all these pieces of the puzzle and you know, just kind of make it easier for you. Obviously, I'm just teaching you on this topic today, right? But I'm also teaching you in the course tax strategies like how we make the S corporation strategy even better by incorporating health insurance premiums and health savings accounts, how to deduct your home office, cell phone, internet, hire your minor children, establish retirement accounts. As a business owner, you can contribute over $60,000 in a Roth account, that's after-tax money, for your retirement when you're a business owner, okay? So give that a look if you want to learn how all of this stuff works. You can go to my website again, click this video, it'll talk you through it for about 4 minutes or so, so explain it to you, and you can preview all this content here that you see. The course is pretty comprehensive, okay? We cover a lot of things here, nothing too much to where it gets boring and monotonous, but just enough to learn all the strategies and how to properly implement them. So you might be asking, you know, when are your taxes due as a business owner? Well, really, this applies to even if you're not a business owner. If you think you owe money in taxes, that can mean that even if you have a day job and your day job is not withholding enough tax from your paycheck, well then you can go into the IRS system and make tax payments. When would you do that? Well, it's set up in equal quarters. Q1, April 15th. Q2, you can see the dates here, June 15th, Q3, September 15th, and Q4, right, September 1st through December 31st, it's January 15th, obviously of the following year, okay? So that's when the tax payments are generally due. A big question is, well, okay, Navi, you told me how much I might owe and how to pay and when to pay those, right? But let's talk about now, how do you pay the tax that you owe? So for federal taxes, you have a couple options. You can go to irs.gov/payments to use this service here called Direct Pay, all right? On the Direct Pay website that you can see here, you can pay your individual federal income taxes, and you can also pay self-employment taxes there, okay? If that's a little bit confusing, I just wanna make a distinction here. So if you're taxed as a sole proprietor, you can go to the Direct Pay website and pay these, your self-employment taxes, and your federal income tax payments, okay? Same thing as a partnership, you can pay your self-employment taxes as a partnership, and you can also pay your federal income tax there as well, all right? So hopefully that kind of clarifies what you can use Direct Pay for. You can also use the EFTPS system. That's right here. It's EFTPS.gov. Maybe I'll throw that in the description too if you're watching on YouTube. And you actually may be required to use this system. So this system, just so you know, requires advanced registration. So it takes about 2 weeks to set it all up. However, on this system, the EFTPS system, in addition to making individual federal income tax and self-employment tax payments, you can make business tax payment. So on EFTPS, you can register as an individual or a business. I know that might be a little bit confusing. What I mean by using EFTPS for business payments is for any taxes that the business itself is required to pay. So for example, if you have an S corporation, your business is required to pay the employee and the employer portion of Social Security and Medicare taxes. And you also have to pay the federal income taxes that might have been withheld from the employee's paycheck, even if that's your own paycheck, okay, if you're the only employee of your S corporation. So if you're making payments on behalf of the business entity, then you need to use the EFTPS system. I'll show you that visually real quick. I'm saying if you're an S corporation and you're set up properly, these taxes right here, as well as federal income taxes that might be withheld from your paycheck, those are tax payments that the business is actually making, okay? The business is making them on behalf of the employee, in this example, John, okay? So that's what you really use the EFTPS system. I mean, as a general statement, I'll say this. If your tax is a sole proprietorship or a partnership, you can make your payments via direct pay. If your tax is an S corporation, the S corporation's tax payment should be made via EFTPS, okay? State taxes. This doesn't apply to a lot of you, but some of you are in a state that has state income tax, right? What you'll do there is you can just visit your state's Department of Revenue website, and there's usually instructions on how to pay your individual state income taxes, okay? I just want to emphasize, in my opinion, if your tax is an S corporation, my advice is to hire a payroll company to handle all of your payroll reports and all of your tax payments that are required. This stuff is kind of a mess to do on your own. I don't even like doing it as an accountant, okay? What you'll do is when you hire a payroll company, it's now their responsibility. Let them handle that. You should be focusing on generating revenue for your business, not keeping track of all the due dates and reports. You should have an understanding of what the payroll company is doing, just a high level understanding, but don't get into the weeds so much that you actually, know how to do it yourself and are doing it yourself. That's just wasting a few hours every couple of weeks on payroll, where you can focusing yourself on revenue generating business activities instead of, time suck activities that don't help you generate any revenue to your business. That's kind of all I have for you. But before I wrap up, do me a favor, leave me a note in the comment section letting me know what you learned, what was helpful, what else do you want to understand better? Did I lose you while going over some of this? I want to know so I can help, create better content for you. And if you need me to expand on something, I will. In a moment here, if you're watching on YouTube at least, check out some of these other videos that might be helpful to you. If you're interested in learning more about the S Corp taxes and kind of how that works, a good video to watch is one entitled How S Corp Taxes Work. That'll show you what the idea of this, what's called pass-through entity work, and what taxes the S Corp has to pay versus what taxes you pay as the employee, okay? Do me a favor before you leave, don't forget to like and subscribe, and I'll see you either in the course or in the next video.